They've also announced that they're starting up a crypto task force to start developing clear rules and regulations. Like, oh my gosh, we have been asking for this. And admittedly, Hester Peirce is the one that's heading up that task force.
Welcome to a Wiser Retirement Podcast. Are you curious about learning more about crypto or what's happening in the crypto news? I'm Casey Smith, and today I'm joined with Robert Shorthout, founder, CEO, portfolio manager of Teton Crypto Capital. Each week, we bring you practical advice on retirement, investing, and planning for your financial future. Don't forget to subscribe to the podcast wherever you're listening. Let's get started. Hey, Robert.
Good morning.
So, Bitcoin's, I think the last time I saw was 104,000.
It was.
What are we back down to now?
The last 24 hours have been quite a ride, and we have that later in our notes here, but it's down to 94,000. It was in the low 90s. There was a crazy amount of liquidations yesterday.
Oh, good grief. I think I was just looking at it on Friday. So that's interesting because that's kind of the trade range. It seems like that it's in.
Yes.
Ever since Trump won the election, every week we have someone calling us going, you remember when you asked us if we wanted Bitcoin in our portfolio? And now we do.
That's awesome. I mean,
so I'll start this off with, are they too late?
They're not too late. At the end of the day, if they're in it as a long-term investor, which they should be, I think that they can ride a cycle. I don't think we're at the top of the cycle yet. I personally think it's a $150,000 to $170,000 Bitcoin, and we'll see how it goes. But yes, the last 24 hours have been crazy. I kind of ignored it. My brother texted me and kind of brought it to my attention. I was out doing stuff outside, enjoying the great weekend we had here in Atlanta. And, there was $2 billion in liquidations in 24 hours, largely through the altcoins. It was the biggest sell-off event. And it was on par with the FTX sell-off and the March 2020 COVID crash of crypto, like crazy liquidations. Something that likely marks the bottom. Again, no financial advice here, but likely marks the bottom of this leg up in this bull market.
Maybe the U.S. is liquidating so they can buy the Panama Canal and Greenland.
And Canada and Greenland and all the things. We have a long shopping list.
I think we're buying Canada. But
yeah. But yeah, so, if you kind of look at it from the lens of, since Trump was elected, so November the 5th, Bitcoin is up as of this morning, 37%. So it's been a great run, even with a $10,000 pullback that you saw over the last 24 hours.
Yeah, when the Bitcoin ETF launched, we added it to the portfolio about a month or so, 2 months or so later. And most of that is up over 74%. Since adding to the portfolio. It's interesting though, when you use such small percentages like we did, it's not really moving any big needles right now.
Right.
But it's more of where are we in 10 years, and that does move a needle. If we get where we were supposed to be in 10 years, but interesting. All right, well, this is your agenda, so I'll let you kind of run down and update our listeners on what's happening in the news. Between me being sick for a week, we've kind of missed our normal extra crypto cycle. So let's get caught up on what's going on out there.
Yeah. So, as I mentioned, Bitcoin's up 37% since the election. What has been interesting to watch, I guess, in the broader crypto market is what is kind of been termed the dino tokens, DINO, in a sense, dinosaur tokens, old tokens, largely utility focused. They having had an amazing run since the election. Some up 200, 300, 400%. Some even higher before the pullback yesterday. But the market is not all. It's not like all altcoins are moving together. You used to see that in past cycles. Now you're kind of seeing it being a little bit more focused, which is interesting. I think long term, this is definitely signs of a healthy crypto market because you're starting to see potentially the coins that will solve problems being priced a little bit differently than the ones that are pure gambling tokens. But this cycle, each cycle is kind of about a theme. This one definitely seems about meme coins. We have on our agenda here, Trump literally 2 days before, or 3 days before he was to be inaugurated in January, launched his own meme coin. Like, I don't think anyone had that on their bingo card for 2025.
Right.
And then like 24 hours later, Melania did her own. It's just like,
I
it
saw
just shows that.
I saw that press conference, and someone's like, do you feel like there's a conflict of interest, with your new meme coin that you just came out
Yes.
with? And he's like, how much should I make? I guess he didn't know. Like I don't think he genuinely knew.
Right.
And because he was all supposed to be in a blind trust, right? He goes,
Yes.
how much did I make? And the guy was like, how much was it? Like 2 billion, 3 billion, something like that.
The market cap went up crazy. It was like billions and billions of dollars. I don't remember the exact number, and it obviously shot up. And then Melania's came out, and a lot of the liquidity in Trump kind of sucked into the Melania's one, and then they're all down like 80% at this point.
Well, they told him some big $1 billion number. The press did, and Elon, Sam Altman were all standing behind him, and he kind of smirk on his face, like and then he pauses for a second. And he goes, that's chump change to these guys.
He's definitely a personality when it comes to finance stuff, for sure. Yeah. So. Yeah, this cycle is about memes, and for better or for worse, I think.
Let me stop you there, because I know everyone's thinking this, and I'm going to say it. What is the purpose of a meme coin? It's like, I feel like a meme coin is like those things, buy this gold coin with Trump on it in commemorative of the election for $200, and it's probably worth $5.
Yeah, it's a great question. I think that the best analogy I've heard is, when we were growing up, kids collected baseball cards. And then you had the age that did Beanie Babies, and then you had the Pokemon cards. This feels like it's on par with that same kind of thing, right? It is a collectible more than it is an investment. It's digital collectible that is speculative. It's not an NFT, but it's a way, Beanie Baby shot up crazy in value just as meme coins have. I mean, admittedly, some people, or very few, have made huge amounts off of meme coins, but it's certainly possible. So,
and to be clear, your fund's not investing in these.
No. I think crypto's risky enough. I'm not necessarily looking for to increase the risk and gambling side of crypto from investors. So.
Okay.
Yeah. But I do pay attention to it just because it's part of the culture of crypto right now. I look forward to kind of outgrowing this adolescent stage, is the way that I like to describe it, and kind of getting on to solving real problems. So, moving on, our next topic kind of fits in a little bit into your alley a little bit here. So there's altcoin ETFs that have been filed. So there was an XRP filing. There was a Solana filing, or a few in both cases, before Gensler left office in January the 17th. And it was kind of assumed nothing was going to get approved until a new administration was in place. And even then, approving an ETF a lot of times takes 240 days. Like, that's kind of, I think, the clock that they're largely on. Well, you could tell there was a lot of applications teed up for that afternoon after Gensler left. Like, I think 5 p.m. he left on a Friday, and then like at 5:05, an avalanche of ETFs started coming in, applications for them, I should say. So for Solana got more, XRP got more, HBAR, Litecoin, and DOT. So there's a bunch of them. And it's not just pure spot market ones. There's some leverage ones. There's some inverse ones. So there's a lot for the SEC to start weeding through on this. And admittedly, they need to have a framework around this stuff, or they're going to quickly get lost in the weeds of how they approve it, when they approve it, and all that stuff. So, and in addition to those specific token ETFs, Hashdex did get approved for crypto index, which was cool to see. It's kind of like long time coming. It's just a mix of Bitcoin and Ethereum right now, because that's the only things that they can add into it. Yeah. But over time, obviously, there'll be some more diversification there.
And, I also think Bitwise would be the first in that space.
Yeah.
And I've never
you never know. I mean, Bitwise may be second in line here and to be more successful too. Hashdex is not someone that I think has a big brand name. Admittedly, Bitwise is not a huge name, but like, it is certainly bigger than Hashdex. So,
yeah, I think us in the industry know Bitwise. I don't know. I've never heard of Hashdex.
Yeah,
but so. I totally see us pivoting to that someday. just to be able to buy one ETF that has the market cap weighted of the more utility coins.
Mm-hmm. I can only imagine how happy Andrew will be, so he wouldn't have to do a bunch of trading
instead of trying to rebalance fractional shares. Yeah, that'd be
absolutely. So, kind of staying on the topic of the SEC, Trump nominated Paul Atkins as the SEC chair. He has not he hasn't had his hearing yet or had a vote yet. So I imagine that's hopefully coming sometime soon. But what has been cool to see with the SEC is they're down to 3 different chairs left. 2 of them Republican, 1 of them Democrat. And Hester Peirce and Mark Ueda are the 2 Republicans. And they have started, in my opinion, to right the ship, at least from a crypto perspective. They literally, I think, day 2, effectively, of Trump being in office, they rescinded SAB 121. That's staff accounting bulletin, basically about how banks could custody crypto, but the way they had to deal with it on the balance sheet, it meant that banks wouldn't custody crypto. That was great to see, and they moved quick on that. Like I was mentioning, they've also announced that they're starting up a crypto task force to start developing clear rules and regulations. Like, oh my gosh, we have been asking for this. And admittedly, Hester Peirce is the one that's heading up that task force. She has been calling for it for years. She was in the minority with Gensler there in the Democrats, but she is focused on, I would believe, if she follows what she said in the past, setting up a safe harbor type situation where new projects can launch. They have a set period of time. I've heard her float like 2 years to kind of get adequately decentralized, so they don't have to act like register as a security initially. So it'd be kind of cool to see how that unfolds. But the SEC has a lot of changes coming. And also there's rumors that, in my guess, this waits till Paul Atkins is in place, but the SEC starts to either drop or withdraw all their non-fraud crypto cases that they have going on in courts. You can make a case that if there's no fraud related, there probably shouldn't have been any sort of case to begin with. It was probably more politically motivated. The biggest amongst those is the Ripple case. No real news there, but it seems optimistic. And based upon, just like comments you'll hear from other people that could be connected at the level with the chair. So Chris Giancarlo, who used to run the CFTC, he was quoted as saying if he was the chair, he would immediately withdraw all non-fraud cases. And basically, he goes by Crypto Dad is his name. Hester Peirce goes by Crypto Mom. They are not connected in any sort of way there, but he's definitely crypto forward thinking and positive. So.
Are you curious why annuities keep coming up as a potential investment option? People are often told that annuities can effectively mitigate investment risks and help secure their financial future. However, annuities often benefit the salesperson and might not be the best choice for you as a consumer. To learn more about the various types of annuities, the negatives of owning them, and better investment alternatives, we have a free ebook on our website just for you. To download our ebook, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity? Simply click the link in the episode notes or visit wiserinvestor.com/guides. Now let's get back to the episode.
It's interesting to see David Sachs being named the crypto AI czar. For those who listen to other podcasts, the All In podcast is where David is. That's where I got to kind of learn more about him. I didn't really follow him up until that point. Yeah. And he helped get Trump elected. I mean, he had a big fundraiser out in California and sort of led the charge on all that before it became cool.
Right. Yeah. It was, I feel like I stay pretty connected on crypto news. And this one, the whole AI and cryptos I think caught a lot of people off guard in a positive way, to think that there's someone that close to the president that is focused on a technology that you care about. So in this case, crypto, or if you're on the other side, AI, but like also not just a bureaucrat that's there. It is somebody that comes from the industry that understands tech. I've heard a few people say that tech has never been as close to the president's circle of influence than ever before. And I would probably agree with that.
Yeah, look at the inauguration. Who was standing behind everybody?
Yes. Yeah.
It was all the tech giants.
Yes. And admittedly, some of them came kissing the ring a little bit leading up to that.
Oh, yeah. Zuckerberg, yeah, for sure.
Bezos. And then Sundar from Google. So
yeah, Microsoft wasn't there, though. I didn't see anybody from, I don't think.
No, I don't remember seeing him, no.
Yeah. Well, Bill Gates wouldn't have been there anyway because he's not really connected with Microsoft.
He's out to pasture. Yeah.
Interesting.
But
I guess everyone else is kind of moving away from this whole DEI thing, and I noticed in the news that Microsoft tripled down on it. So, I think that was possibly maybe what they were just kind of like, forget it, we're our own thing. They also geographically where they're located, I would think it'd be really hard to say, we're not going to do this when probably the majority of their people and where they live would still be of that persuasion.
And you have to wonder, like, I know that Bill Gates is not active in Microsoft on a day-to-day basis, but obviously his gravity is still around Microsoft, and him being more Democratic leaning, you wonder what kind of influence that has on a company like that. So, but so the whole AI cryptos are, so we'll jump to, I guess, something further down in our notes, the Trump executive order. So I think this dovetails well into that. So Trump signed an executive order around crypto. It basically established a presidential working group around digital assets, just very simple language there. The working group is tasked with developing a federal regulatory framework governing digital assets. So much like what the SEC talks about, the question is whether the SEC should have jurisdiction over that. Well, I imagine that kind of gets shaken out in this working group. So digital assets, stablecoins, and also evaluating whether the U.S. should have a strategic digital asset stockpile. I think last summer when we recorded, we talked about there was rumor of a strategic Bitcoin reserve and how there was legislation coming for that. And there is a bill that is still in committee, introduced by Senator Loomis from Wyoming, about having a Bitcoin strategic reserve. Well, this seems potentially a little bit more broad. There's rumor that this would be digital assets that are U.S. based. Based is kind of an interesting word to use there because obviously they can go across borders, but there's certainly some that are, shepherded by companies that are based here in the U.S. or started. So that's that piece. The working group is also going to be chaired by the crypto czar David Sachs, and should include the Secretary of the Treasury, the Chairman of the SEC, and the heads of other relevant departments. What I have found really interesting about this and the conversation online is you start looking at like who is not in that list. So the Fed is not in that list, and the FDIC, the two agencies or groups responsible for Operation Choke Point 2.0. The Trump administration has been very against that and how it's handled against how they handled the crypto industry. So it's almost like they've been put in the timeout corner of some sorts here. So we'll see how all that shakes out. The order explicitly calls for the chair to consult outside experts, which is great. The order directs the government departments and agencies to recommend regulations and other actions affecting digital assets that should be rescinded or modified. I think that's the important part because we just don't need regulation. We also need to get roadblocks out of the way, in my opinion, that were put in place to hamper the use and growth of this industry. So, in the last piece, I guess, the order prohibits agencies from undertaking an action to establish, issue, or promote a central bank digital currency. So that should be a surprise. Trump has been very much against that. And it's at the end of the day, I don't think it matters in the US. We have stable coins, which are much more retail focused. And at some point, there could be a stable coin that is more commercial focused, which kind of acts like a CBDC at the end of the day. So, yeah, so that a bit of a mouthful in the executive order, but David Sachs kind of getting to oversee that working group. He's got a lot of work to do. And that group, I guess, as a whole does, but it's a bright day in crypto land. Trump got elected. That was a big day. Then to kind of see all this come forward and see Trump follow through, at least initially, on this executive order to kind of try to get it moving is something that is, a positive step for sure.
So in your notes here, you're talking about SpaceX using stablecoin.
Yeah.
Can you walk us through that?
Yeah, it's pretty cool. So people often ask, what is crypto good for? And admittedly, it's early on trying to find use cases, much like the internet was in the late '90s, early 2000s. But what SpaceX is doing here is, I think they service like 100 countries or 150 countries now with their service for Starlink, and but they don't really want to deal with the foreign currency exchanges on a lot of these long tail countries where there's not tons of liquidity. So they're taking that local currency, buying a stable coin in that market, and immediately they're back into dollars without all the FX risk that would take days and have a lot of fees. I just think it's cool. A company says they're doing it, and B, admittedly, a company that has basically a global reach. It'd be on par with like one of the big tech giants doing it in some ways because they're in so many different markets. So it's I guess it's a great use case for stablecoins. It's not like they're using them in a way that they weren't designed, but that's exactly what they were designed for.
And for our listeners, stablecoins are tied to the U.S. dollar, which makes them
or a currency, but specifically the dollar in this case. Yeah. And tied to the dollar can mean a couple different things. You have basically 3 or 4 different stable coins in the market that are dollar based. Most of them are treasury and cash backed. Some of them will start adding in some other types of bonds. That's Tether USDT. That one, it seems to be falling out of favor with regulators, certainly in Europe, potentially in other markets. So, I don't know if we're at top Tether, and we will get to talk about their crazy business here in a minute. But it's interesting to kind of see that market kind of slowly adjusting. Here in our notes, Ripple just launched their own stablecoin. It's the most regulated stablecoin on the market. The New York Department of Financial Services regulates it. And this is me being a novice. I didn't realize how big of a deal that was until you started hearing the marketing around what it takes to get something like that. Like a lot of stablecoins are not based in New York specifically, so they don't have to deal with that department. Mm-hmm. But Ripple decided to go that hard route and do that. And the Ripple's going to use their stablecoin more in a commercial use facility, but it doesn't mean that retail can't use it either. So
interesting.
Yeah. So on the topic of Tether, I guess we can jump to that one. The 2024 profit for Tether is mind-blowing. So again, they're the company that owns, I guess you could call it, and runs the stablecoin USDT. They had $13 billion in profit last year.
Wow.
Billion with a B. It's just incredible. If you start looking at profit on a per employee basis, they have 150 employees. That's just under $87 million of profit per employee. That makes the tech giants or Apple, for instance, they're at just shy of $600,000 per employee. Crazy magnitude of difference. So I don't know. It's just, I think obviously interest rates being higher is what's made that business model be so profitable. And, I think that cuts both ways, right?
Where does that 13 billion go? Do you think it gets reinvested back into the company? You think all the employees are living the high life? I mean, what's
I don't think it's employee. I imagine the employees are compensated well. So they currently are based in the Caymans. They are moving to El Salvador. To me, that is a bit of a writing on the wall right there anyways.
Yeah, right.
There's always been this suspicion around them. Do they have all the funds to back it up? I don't know. Their quote unquote audits are done by their internal team and published, which is not an audit.
Right.
So
hopefully they don't do more than QuickBooks.
Yes, they don't help themselves in cases where they could potentially go the extra mile and prove it. They just have opted not to, which again only adds fuel to that fire.
Right. I think with $13 billion in profit, you could hire a real audit company.
Right. But my guess is this is pure speculation. I'll say this up front. I'm sure they've approached someone or some firms, some well-known firms, and asked them, and they just didn't want the liability of being lied to.
Yeah.
Again, because they've built this story around themselves that they may not be honest.
Right.
So I don't know. It's crazy times, but yes, that money doesn't get reinvested back into Tether because that would make sense because they're trying to make it be a one-to-one pairing to the dollar. So that's the owners of Tether. That is a cash cow, and in some ways they should ride as long as they can, right? I mean, like I don't fault them.
As long as they're doing the accounting right.
Correct. I don't know. Like a lot of liquidity in crypto is tied to Tether right now. So if there's a black swan event sitting out there on the horizon somewhere, it could be a Tether event. Again, I'm not trying to create FUD here. It's just recognizing for what it could be. But like contrasting that with Ripple and USDC, made by Circle here in the United States. They both do audits. Ripple's doing a monthly audit, proving, attesting to the reserves and all the things. So those two seem to be on the up and up. Tether claims to be, but there's no real proof. So, but yeah, it's when I first read that $13 billion number, I looked at it. I'm like, what? Then I went and looked I was like, that tweet is wrong. I went looking for others, and they all seem to back up that $13 billion number. So good for them, I guess.
Right. Interesting.
I guess on the topic of a market structure or regulations. So the House Financial Services Chair, French Hill, was saying that he would like to make it his priority in the first 100 days of this new Congress to get a market structure bill for crypto passed. In the past, I've heard lots of promises by politicians around crypto, and for the vast majority of them haven't followed through. I would love for this, obviously, to be the case. It seems more possible than ever at this point, especially with the friendly, White House. And I don't know. But again, we need the correct regulation. We don't just need regulation. We need thoughtful. In my opinion, I went low touch, much like they did with the internet. Figured out let that go. Figure out what works, and then kind of adjust it over long term. Don't try to be perfect out of the gate. So,
yeah, yes, we need regulation. At the same time, the U.S.-based ETFs was a huge leap forward. Because if you're buying the ETF, you basically have SEC is sanctioning those funds. So that's why one of the most common questions I get is say, hey, I like to do this Bitcoin thing that you keep talking about in my portfolio, but I'm concerned that it'll just get stolen. I'm like, well, no, it doesn't work that way. This is not where you have your own private wallet anymore. And it's no different than buying the S&P 500. So if your Bitcoin in your ETF can get stolen, so can your S&P 500, and that doesn't happen. So that part makes it better. What you're talking about is just more of the rules of engagement. So the next 4 years you're probably not going to get sued, but after the 4 years, who knows what, right? So if you don't have regulation in place, it's kind of the wild, wild west.
Right. And, from an entrepreneur standpoint, it's like you want to start a business, you generally want to follow the laws. I mean, I think vast majority of entrepreneurs want to be lawful, and you think you're doing something that's okay to find out that you're not, because someone just changed their opinion versus actually, votes to change a law. They're way different things. So it can be a scary thing. And a lot of innovation that was happening in crypto started moving offshore over the last 4 years. And it sounds like it's starting to shift pretty quickly back, but we will see.
Yeah, absolutely.
One last topic that is not in our notes that I think that will be interesting to your listeners is tokenization, right? We've talked about this in the past. And the reason why I'm bringing it up is Larry Fink was interviewed, I think when he was at Davos a couple weeks ago or a week ago. He's like, I want the SEC to rapidly approve tokenization of bonds and stocks. Okay. So to me, it's a no-brainer. Like this, I've been waiting for this to happen, waiting for it to happen for years for that matter. But it's, I joke with my friends that what Larry wants, Larry gets. And I can't imagine he's making this comment without something backing it up, rather than just a hope.
Probably the old administration, I would say that he gets what he wants, but I don't know about the new one. He's kind of an outsider now.
Yes, but with an asterisk, and I would say one of the smallest, but I think most important reasons why I think we're going to get regulations and things will move in the direction that he wants in this case is the Trump family is doing stuff around crypto, so the Trump family can make money off of crypto. Not saying they're doing it solely for that reason, but you can't imagine they're going to go against themselves. So again, supposed to be blind and all that stuff, but
what you're talking about tokenization though is if you have a bond fund that you could buy fractions of that through, right?
And it's more. I would assume
or whatever. It could be anything.
Right. It could be anything, but he's asking for stocks and bonds, and I think specifically it is a back office function for him that he sees the efficiency of. Once it's tokenized, it functionally can trade 24/7. And as a crypto native, I like the idea of that happening because it brings more liquidity into the system. And all of a sudden, we're going to start to see use cases for tokenized things that we've never been able to do. Like, easily without being, say a high net worth individual, you may be able to take your stock portfolio and get a loan against it to do something you've never been able to do before easily or as quickly. There's different reasons. And that's a small example, but I'm genuinely excited about that. And, if we're going to wake up one day and we're going to be like, how this happened so quickly, I think is how this topic is going to go. So
interesting. And that'll blow everyone's minds. No one will understand that. So it would definitely be more of a back office, or large family office using that process to invest in different things. I can see that.
That it's a being 24/7. Like the news cycle can be all different. There's no concept of waiting until 5:00 on a Friday to do a press release to not affect your stock until Monday. Like all that goes out the window. Like welcome to crypto as we know it, because it's 24/7. So
the markets will be open 24/7.
Yeah, so you can get zero sleep then.
Yeah, I know, right? I was just thinking, young guys that are on the trading floors or the traders at these big firms, that'd be horrible.
You would have to wonder, yes. Yeah.
You'd have to morning shift and night shift.
Yeah.
All right, Robert, thank you for the updates. If you guys want to learn more about Teton Crypto Capital, Robert, what's your website?
TetonCryptoCapital.com.
That's easy. You can also leave comments. We're happy to answer any questions you have in the notes below. If you're watching on the YouTube channel, which is called A Wiser Retirement. And if you'd like to learn more about Wiser Wealth Management, you can do so by going to wiserinvestor.com and click schedule now to book an appointment with one of our fiduciary advisors. All right, man. Have a great week.
You too. I'll see you.
All right.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced by Rachel Dotson. This podcast is strictly for informational purposes only and is not to be considered as investment advice or solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investor advisor with the SEC. The host and/or guests may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guests of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.